Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, Thekouk, thekouk.com, and on X using the handle thekouk. Stephen, good morning.
Good morning, Sean. How are you going this week?
Oh, great. We had a fantastic week last week, lots of economics to talk about, but let's start with our favourite economist, Reserve Bank Deputy Governor Andrew Houser, who came out all guns blazing, saying, you blokes are just taking it all a bit too seriously, Stephen.
Don't tell us what to do was basically the code, or not so code ridden speech that he gave. Look, it was a fantastic speech, and he was really saying that a lot of us economists talk about the economic, the interest rate outlook, and make our forecasts with a high degree of certainty when we know, and the Reserve Bank know, that there's a high degree of uncertainty attached to those forecasts. And he was just sort of saying that it makes their job a little bit harder when you get people thumping the table saying, oh, the RBA's got a hike or they've got a cut, when in fact the reality is somewhere in between, so they're on hold. I think that's the sort of thing that he was trying to get to. And
I know, but not all of us have the luxury of sitting there pontificating, deciding will we, won't we. Some people have to make a call, so investment decisions can be made, business decisions can be made.
Yes.
I thought it was a little rich, to be honest.
I did too. Look, I appreciated the speech, but I've been chatting to a few economist mates, of course, about that speech, and we're paid to have a view. Yeah, I can't imagine us going to see a client. You're going to see a big investment client or a corporate or someone and saying, oh, look, we're not really sure what's going to happen in the economy. It might be okay. We can't see too many risks, or you have so many risks that you end up saying nothing. We would be kicked out of that room faster than you can say
totally.
Recession. So you've got to have a view. You've got to back the issue to me when I thought about what he was saying is that having views, it's the reasons why you have that view. So why are rates going up? Why are rates going down? And if you can analyse that and then sort of not pick holes, but sort of say, look, I can see why you're calling rate hikes, but I don't agree with you that the economy is still running hot, for example.
Yeah.
And that's the contestable point about all that sort of stuff. But yeah, we're constantly got to have you. Like it's going to the Melbourne Cup, and you've got the, good old Greg Miles when he used to call the Melbourne Cup, sort of saying, I'm not sure who's going to win the race. It depends on who gets luck and running, and waiting till the sort of 50 metres from the winning post saying, I think I can give you the tip now.
Yeah, thanks very much.
You need the tip. You need to forecast. You need to take risks, and so does the RBA. But I love him, the Hugh Grant in terms of his looks, and a really good fellow, really interesting fellow, and certainly with a lot of colour, which is also good, I think, for a central banker.
Talking about colour, last week's data, we had, the unemployment figure was really interesting, something for everyone. We had interesting wages data, US data. Fill us in.
We'll start with our local labour market data, because the wages numbers were actually a little bit lower than expected. There were some upward revisions to the data a few quarters ago. So the annual figure stayed at 4.1% growth in the wage price index. But the quarterly reading was only 0.8%. And in fact, the last two quarters were 0.9 and 0.8. So that's 1.7. I can do the maths quite quickly. You annualize that and you're about 3.5%, a fraction lower than that actually. And that momentum in wages is starting to taper off, so that any fears of a wage price spiral, to the extent that they had any validity, are probably invalid right now. That wages growth is moderating with the moderating in the economy, and the labour market numbers that you alluded to, Sean. We had the 58,000 increase in jobs, I think it was, but the unemployment rate went up from 4.1 to 4.2%. So I think when we cut through those numbers, we're getting a lot of jobs created because the population growth is so strong, but the economy is not running fast enough to absorb all of the increase in the workforce participation into the ranks of employed. Ergo, unemployment's gone from 3.5% about a year ago to 4.2% in July.
So it's certainly on the rise, the unemployment. The labour market it's not falling off a cliff by any stretch, but it is softening somewhat.
It's softening somewhat. And again, the thing, I'm old-fashioned in many ways.
You are, Stephen. You are. Go on.
Look, I'm a big fan of the leading indicators for employment and the unemployment rate. Things like the good old ANZ job ads. And they used to be newspaper ads, but of course they've had to move to internet ads. Seek put out a job vacancy series. The Bureau of Statistics do a job vacancy series. And if you look at a chart at the job vacancy, so demand for labour, in other words, you don't put an ad on one of these sites unless you need to have more people working for you. Whoa, they're all falling down. They're all down about between 25 and 30% from their peak, roughly 18 months ago. So that says to me that with a lag, this is the other thing we've got to be very patient about, lags. You're going to get the unemployment rate continuing to sort of grind high, not zooming high, but grinding higher over the course of the next, 6 to 9 to 12 months.
What about the data out of the US last week?
Yeah, well, we had the big one was the inflation number, the CPI number, and that came in broadly as expected. We had the producer price index too, which is sort of one of the feeds into the goods inflation side of US inflation. Both were either at or marginally below expectations. The bond market rallied. The September meeting of the US Federal Reserve's got a 25 basis point rate cut priced in with a probability, like a genuine 50, 60% probability that we're going to see a 50 basis point rate cut when the Fed meets in the middle of September. So the inflation rate, the inflation momentum's coming down in the US. Rate cuts about to be unfolded in the US, and that's pretty big implications. And we saw the stock market react to that as well.
Not a lot going on this week, Stephen, on the economics front at all. I mean, I suppose we've got the Reserve Bank minutes, though that's somewhat superseded by the fact we have a press conference after the board meeting a couple of weeks ago. So you can have a bit of a quieter week.
Well, there's no top-tier local domestic economic data from the Bureau of Statistics. And yes, the board minutes are still interesting because it does elaborate some stuff that perhaps the governor might not be asked at the press conference. So, and when they've got this bias and clear concern about demand exceeding supply and the economy, I think as Sarah Hunter, the assistant governor, said a week or two back now, the economy in some areas is still running hot, quote unquote. I'd love to see which parts of the economy they put the flesh on those comments to really identify where the economy is running hot or where demand is too excessive. So we'll look at the minutes as we always do, but it might just be one where we can have a relatively quiet time during the day, but the evenings when the US and European markets are open will be where the fun will be.
Having said that, in a few days, you're off overseas for a couple of weeks holiday, aren't you?
Well, indeed. So I won't be looking, but I'm heading on to the Big Silver Bird very shortly, in fact, and heading off for a couple of weeks of holiday. So richly deserved, in my opinion.
Absolutely. I'm with you totally. Enjoy that, Stephen. Thank you for joining us this morning.
Fantastic. See you in a couple of weeks.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.